Hello. Hi. Um, Greetings to fellow traders. The agenda for today we are going to talk about is taking full advantage of precise trading zones. And this is Raju here. Okay, what we will be doing is, okay, we would be taking live trades provided there is signals. Otherwise, we can discuss on potential trades or viable trades, right? And do take note that whatever we are discussing on education. So no matter what happens, I think you have to stick to your rules and also your trading limits, right? And you have to practice putting stop losses, so on and so forth, right? And also do take note that the crosses which we can discuss on is any in all we. So if you want to discuss on any specific crosses, you may do so by asking questions and please specify the time frame which we are planning to discuss so that when we discuss, at least we can be more precise on specific time frame, because what we believe is, rather than we be quite vague on our statements, okay, we would like to be more precise on the time frame which we are discussing, so that it will be much more useful in our discussion. And also do take note that the numbers or the tools which we use to derive or to get these numbers are Fibonacci, Andrews Pitchfork, moving average, trend channels, and GAN numbers, so on and so forth. So as a result, you should accept the fact that if you are being in the technical analysis, so you should understand that these tools work nicely most of the time. So it's just that how do you control your risk versus your exposure, that's what makes the difference between you being successful or not being success. And we also give trading tips every session. I think the last few sessions we gave, these are the trading tips which we gave. Trend is your friend. Buy the valley, sell the peak. First entry for the day is critical. So plan your trade. Never average your losses. And the trading tips which we are going to give or talk today is dictate your risk versus reward. Okay, this statement is a bit vague, because sometimes you must know before you take your trade, ask yourself what is the risk is going to be. That means what is the risk you can afford to lose in the event the trade goes against you, and also what is the reward in the absence, meaning in the sense when the trade goes in your favor, what is the reward you get for that particular trade or that specific trade. So when you dictate this, so chances are, your emotions would be under control, because you know that, okay, this is what you're going to risk for this particular trade, and at the same time, this is the reward you're going to get. So at least, you have to plan your trade. So what is so special is because, when you plan your trade, you do not need to get emotional when the trade goes against you, even 20, 30 pips against you, or, a couple of pips against you. So you can still be pretty sure that, okay, I am protected, and at the same time, I should be whether in or out with either you make a small either you make a profit or you exit with a small loss. And also do take note that when you talk about the risk versus reward, your ratio must justify. Okay, we usually practice the region of 1:1 or 1:1.5. Okay, never less than 1:1, less than 1. Okay, meaning in the sense, for example, if your risk is about 30-35 pips, your reward should be at least about 30-35 pips. That's the minimum you can go. So sometimes when you take a trade and when your reward is less than your risk, then it's not a viable trade. So you have to wait for better entry prices for you to take your trade. And we strongly recommend sometimes, when the reward can be even 1:1.5 or even 2, meaning in the sense when your reward is twice than your risk, which is where when you get that kind of scenario, you can increase your lot size so that you can make a good profit from that particular trade. And also do take note that when we talk about the risk versus reward, sometimes, there's a lot of people, they are unaware that sometimes when you trade on the same basket of currencies, like for example, like when you trade New Zealand, Kiwi, meaning, Aussie, New Zealand, Canadian, all those commodity crosses. So when your risk doubles, meaning in the sense, you may have the same risk versus reward, but when you trade on the same crosses moving together, correlated, chances are, your risk may become double, right? So this is a thing which I would like to highlight to you. Okay, in fact, coming back to today's session, uh, we have a RBA rate announcement, right, coming in another about 9 minutes or so. So I think most of the market are pretty quiet, meaning in the sense I think the market is waiting for this announcement. And we also have a BOC rate announcement, which is tonight about 13:45 GMT. So also do take note, this kind of event, sometimes it is best for you to stay sideline when the data is out, when the news is out, because the swings can be wild. So that especially if you put a very small stop loss, chances are you would be stopped out unnecessarily, right? In fact, the trade we are looking for today is, if you look at the net change, in fact, most of the crosses are flat. Okay, this euro is about minus 19 pips from on the previous day's close. Pound is about 46 pips, which is trading below that support zone 1 for today. And the rest, Swiss franc is about 15, yen is about 18, Canada is about 14, Aussie, New Zealand, all are pretty flat. So as a result, it is best for you to stay sidelined before this rate announcement. Once the news is out, if we get some viable trade, then we can look forward to take that trade. And also, we also believe in we should always trade the market and not your expectations. What do I mean by that? Meaning, see, sometimes when you feel that the market is not giving you any clue, or trading in a range trading, or trading sideways, with too many whipsaws happening, it is best for you to stay sidelined, because you wouldn't know where is the breakout is going to happen. And when the breakout happens, chances are, unless if you put a stop loss, then chances are you may be stopped out. But so it's better for you to wait and take entry after the break, right? So in fact, yesterday I think cable, in fact pound was had a very big move. It had a huge drop, almost like about 400 to 500 pips down. If you notice yesterday, pound high and low. Okay, let me show you this. 152.40 and about 147.80, which is about close to about 400 over pips, right? And and pound against most of the crosses was pretty weak yesterday. In fact, against Canadian dollars about 400 pips down. New Zealand was about 300 pips. Aussie is about 300 pips. So overall, it was a big drop yesterday. And pound Sing dollars was also a huge drop. So try to in this kind of move. I think the news came out because this election on that UK. They are not expecting any majority from any of the parties. So that's one of the reasons, because the fundamental reason. But a lot of stop loss were triggered, meaning there was a lot of stops triggered. So as a result, you see this cable dragging the crosses all the way down, right? So also do ask any questions, if you feel we want to discuss on this any specific instrument which we are talking about. So while we are waiting for this market to move, what we can do is I'll quickly run through. I know I'll take about 2 or 3 minutes so to run through the report, the numbers, the specific numbers, trading zones which we use in our trading decisions. Let me show you the screen. This is the numbers which we use. In fact, most of the traders, most of our clients use in taking their trading decisions. So let me run through quickly, how to use this report, or how to use this set of numbers to take your trading decision. So this is let me look at this example, Euro USD. Okay, this is the today's report, and we have this Euro which closed. We use this level as a benchmark in our trading decision. So this previous close or the prior close, which was the US trading close, which was 135.60. So right now the market is trading at 135.40, which is slightly below that previous close. So as a result, you should know that the sellers are gaining control, but it is not. They have not given a clear indication that they have taken total control. So we have to wait for the market to move. And generally, we give three time frames of trend direction, and most of the clients, they can use on whatever time frame which you are following, or whatever type whatever type of trader you are, meaning, whether it can be a intraday trader, scalper, a short-term trader, or even long-term trader. So this hourly trend here, it says sideways while 136.65 holds. So what it means is the hourly trend is sideways, meaning in the sense the market is not giving any clear directions, because the market is moving zigzag, and probably the market is waiting for some news, or the market is thin, that may be the reason why you see this word sideways is here. So we see while 136.65 holds. So overall is right now the market is trading at 135.40, which is below this level. So overall, what we are saying is the price is, even though it's sideways, as long as this level holds, the price is expected to come down, right? So that is the signal you need to take note on this statement. As long as this level holds, the price doesn't break this level, the price is expected to come down. And this daily wise is sideways while 138.40 holds, and the weekly is also sideways while 142.60 holds. So overall, all the three time frames are telling you that the market is not giving any clear direction where it's heading. So, but overall is the selling pressure should be there while this level holds. So after you have known the trend directions, right? So what we would like you to do is, probably go under this economic calendar. This is where you see this important data announcement. So this, the reason why we are giving this is we would not want you to trade whenever there's important data announcement, because especially if you use a very small stop loss, chances are you may be stopped out during that trade or the data announcement. So after that, we have a section 2, which is where you can look forward to what is to be expected, or how can we trade week. Our summary is generally what is history, what has happened yesterday based on our report. So this is you can just read and just have a brief info what has happened. Like for example, the zero closed at 135.50, which was below the open and was within the prior day's trading range. The high was precisely at the precise traders resistance zone 1, and the low was 10 pips from precise traders support target 3. So this is what happened based on the report. The section you need to pay attention to, these are the levels, these are the sections you need to pay attention, where to see or to define what you want to do or how you want to take your trade. The trend wise, the hourly oscillators are bearish and the price is below the moving average, so the bulls have to be sidelined. Hourly trend is sideways while 136.65 holds, and daily trend is also sideways while 138.40 holds. So expect the price to be choppy with a downside bias. So overall, what we are saying is the price is expected to come down. So try to be, if you are a buyer, try to stay put or stay sideline, because the market is expected to come down even though it's choppy. So the daily wise, we have 3 levels. These are the boundaries you can use for the day, and the low wise we have 3 levels also. These are the maximum lows you can expect for the day. So here on this high wise, it's 136.65 or 137.45 or 138.05. This can also be a trading opportunity if you are getting this when you see the price hitting this any of these levels, right? So the patterns wise, this is the most important section you need to know for you to do your analysis, or for you to look forward to what is to be expected. So this daily trend was within prior day's trading range, with the bears giving up more than half their gains towards the close. The hourly trend has been in a range trading with a downside bias. So 135.95 and 136.65 are the critical levels to watch to maintain the bearish outlook. So what we meant by that is, as long as the price doesn't break or close above this level, the immediate level, which is 135.95, or the further level, which is worst scenario, is 136.65, then the price is still expected to come down. So this is the thing. These are the levels you need to pay attention in order for you to maintain the bearish outlook. That means you are expecting the price to come down. So these are the levels you need to pay attention to. And on the 5-minute, it's along the gradual down channel, and the price patterns are suggesting lower lows are expected, provided again 136.65 and 136.85 holds. So overall we are still saying that it's expected to come down as long as the price doesn't go or trade above this level. The opening price principles are mixed, so cautious approach is needed. So what we mean by opening price principle, what we meant is, because we do a specific, see, the strategies which we apply is called price level principle. Okay, basically what it does is, it analyzes the price behavior and concludes and gives you a tool, for you to do what is to be expected. So for example, like yesterday, we set on cable, cable is very weak, so expect the price to close near the lows. That's the statement which we gave yesterday, which I think, it really happened, and cable was pretty weak yesterday, right? So, and as far as these bulls are concerned, I mean, these are the levels you can use if you are bullish or if you are planning to take your entry or booking your profit. These are the levels you can use. So bulls wise, 135, 134.85, 134.45 or 133.80. And if you are bearish or looking to sell, then these are the levels you can use. So these levels can be used as a guideline to take your trade entries. So, when you take trades on a specific level, chances are, there's two things. One is, most of the time, your risk versus reward, that's justified. And, sometimes, you may miss the trading opportunity, because sometimes when you key in the miss, I only want to sell when the price hits, 135.95. So sometimes what happens is the price may not reach that level. It may turn before reaching that level. And as a result, you may miss the trade, which can be a frustration, but as you learn to use these levels, then you can slowly fine tune and take your trades as you go on. And we gave, these are the strategies to look forward to. Conservative traders, you have to sideline because the market is not very clear, or strictly trade only at our levels. And aggressive traders, short near 135.95 or 136.30 with a tight stop with a 50 pips price target. So this is the trading tip which we give to all traders. All like FX Street. You can see this trading tip which you can use it in your trading decision. So after you have read this more or less, you should know that okay, this is what I'm expecting. I'm expecting the market to be a bit bearish. So I'm looking to least risk reward trades, right? So then you begin the day by looking at the day by where is the last price trading, and you start off the day by looking at this. And we use this resistance zone 1 and support zone 1, okay, as our guidance to take our trade decision. So the resistance zone 1, which is 135.95, and the support zone 1 is 135.25. So whenever the price is trading within this zone, okay, we call it a no man's zone, right? So as a result, the price is expected to be choppy whenever the price moves into this zone, because the directions may not be very clear until it breaks out on any one of the directions. And the trading, this signal is been generated by these two levels. Okay, for the day, that means you begin the day by trading. That means if I see that low for that euro, as long as it's within 135.25, that means within this low, within this level, and when the price breaks 135.95, then I can look for a buying opportunity, right? And when I see for a buying opportunity, of course, I should know where to book my profit. So that's where I look at my resistance target 1, 2, 3. These are the levels I use to book my profit, which is 136.15. Okay, I have a 136.85, which is another level to book my profit, and which is a resistance target, which is 137.45. And we have a one more level, which is a U-turn zone, which we call it, because this is where most of the time you expect the price to have some resistance. So 137.05 is another level. So all in all, if I am long at 135.95, my booking, my profit level should be 136.15, 137.05, sorry, 136.85, 137.05, and 137.45. So these are the four levels I use to book my profit. But looking at today's scenario, right? So maybe you can look forward to short, because you must understand that overall is you use this price level principle at the same time together with the trend, it will complement your trading decision. So for today's trade signals, okay, maybe later on I'll show you on the chart. What I will be looking forward to is there's two trade signals which I will be looking forward on this particular instrument. One is I should be looking to short near 135.95, right? So if I'm short at 135.95, then I use about 35 pips stop loss, and my profit target should be within before it clears this the support zone 1, because as I told you, you should remember that when the price moves back into this zone, the price becomes very choppy, and of course once it clears 135.25, then I should know that the price is expected to go lower. Then I can be a selling mode, right? So these two trade signals which I will be looking for this particular instrument is I'll be looking to short near 135.95. Later on I'll show you the screen. Okay, maybe I can show you the screen now. Okay, let me okay, this is one viable trade which we are looking to short. Okay, that means order type it's a limit sell. Okay, I'm planning to sell at 135.95, and my stop loss would be it's a very tight stop, because you must understand the fact that because market is in a range trading, so you have to be nimble, meaning in the sense you have to be your contract size has to be very small. At the same time, your stop loss also has to be very tight in order for you to be regularly in the business, right? So my exit level would be maybe I'll just use about 35 pips, which is again 135, maybe 55. Let me show you that screen. Okay, so this is just a quick trade, because I'm taking a trade once the price move into that no man's zone area. Another trade which we can use on the same statement is, same instrument is, you can look to short, right? Okay, that means it's a stop sell order once it breaks 135.25, right? And my stop loss again would be about 35 pips, and my profit target would be 134.85. So also do take note that whenever you take trades, you have to use plus minus 5 pips, because different brokerage firm will charge you a different spread. So as a result, you should be having a variance of plus minus 5 pips on most of the majors. And when you do other crosses, then we use about 8 to 10 pips, because the spreads are quite wide. So in between now, okay, you ask me what shall we do? Okay, chances are, we wouldn't want to do anything, because we only believe, like as I told you, we use a price level principle. So as a result, I know that, okay, this is what I have a game plan in my mind. I have my risk versus reward, so that, okay, this is what I'm going to do. And in the event, and you should also understand the fact that we all are trading on probabilities, right? So let me show you that screen. And let's discuss on that. And also we use most of the time we use 1 minute and 5 minute chart in our trading decisions, right? So we do not want to use higher time. Of course, the higher time frame we use it mainly to take our trading decisions, but our entry should be on a lower time frame. So here, if you recall, okay, I showed you that our resistance zone 1, which is 135.95, and our support zone 1, which is 135.25, right? So if you notice, what has happened is the price has tested 135.25 and starting to move higher. So as a result, if the price is moving within this zone, right, before it hits this high or even our resistance, which is 135.95, then you can have safely say that this price should come down. Directions right now as it is. So as a result, I think for you to, it's smarter for you to use. You're not getting the pointer. Give me a minute. Sorry, give me a minute. I do not know why I'm not getting this pointer, Okay, I think the pointer is not working, so I'm sorry, bear with me, you see, because this is the thing which I'm not able to resolve, right? Anyway, I'll tell you the figures. So here, if you look at this chart, right, 135.95 is where, we are expecting some resistance or some barriers to happen. So that might be a level to consider if you are looking for a shorting opportunity. And of course, if the price doesn't break or doesn't go higher than 135.95 and the price gives way to 135.25, then that would be a shorting opportunity for a quick sell. Because you must understand that this market is still in a range trading. So we should be trading the market and not our expectation, right? Yeah, sometimes you have to trade the market, that's what I feel, this is because when the market gives you a good signal, then you take it. When the market is not giving you a good signal, then I suggest it's best for you to either, you can be sidelined or you have to be very nimble, right? So let me now answer your questions, okay? Because now the market, as I told you, most of the markets are still in a range trading. There isn't any breakout happening. So as a result, we should be waiting for the markets to break. Then it would be a better trade. Okay, the question is there any going to trade Aussie today at the rate announcement? See, because let me show you the Aussie. Okay, this is the situation for Aussie. Okay, this is the chart for the Aussie. So we do not trade on the news, okay, because we do not believe on trading on the news, because that during that time the swings can be wild, right? So it is best for you to trade after the news or after the news has responded. So in fact, if you ask me for the Aussie US, okay, the levels we have a resistance zone 1, which is 90.40 and 90.55. So right now, if you notice, the market has been on that. Okay, let's say I show you on a 2-hour chart, right? So this 2-hour chart, because most of our analysis we use especially on a 2-hour chart to do our analysis. So if you notice on the 2-hour chart for the last 2 to 4 hours, okay, the market has been moving sideways, but the bulls are slowly gaining strength. Okay, I think it is starting to break. Okay, it is starting to break. You see this? So this is what happens whenever the news announcement is happening, right? So as a result, in fact, for this instrument, okay, what we would want to do is, okay, the levels which we want to pay attention is 90.40 and 90.55. So these are the two levels we would like to pay attention to see, as long as the price doesn't break this level, chances are, you can expect this market to come down, right? So as a result, you have to wait for the price to see, because now the news has just came out. So as a result, you see this swing happening. So it is best for you to, like as I told you, it's best for you to dictate your risk. So if you are looking to short near this level, you must understand that you are trading before the market gives you a reverse. So that's the thing you have to take note. And on the downside wise, we are looking to short but 89.80 or even 89.65. These are the two levels we would like to pay attention on the downside. So if the high holds and the price starts to break 89.80, chances are, it should come down. But again, you must understand that the news, so you have to see what is the news coming in, and you have to trade the market. Okay, the next question is, can we look at euro yen? Okay, this euro yen wise, let me show you that euro yen. We are looking at a 2-hour chart. Again, this is also in a range trading, right? So, but it has not given you any clear indication of the down. So if you notice, the market has made a lower low, right? And it is trying to have make swings within this low and this high. So whenever you get this kind of trades, right, you have to be very nimble, meaning, you have to take your trades and you have to be very fast, or you reduce your contract size because the market is not giving you any clear indication. So here, if you look at this, the levels for euro yen is, we look at 133.95 and 133, sorry, euro yen, sorry. The levels which we look at is 121.35, 121.15 and 121.35. Okay, on the downside is 120.55 and 120.35. So overall is, again, this is within this no man's zone area, right? So whenever it moves to this no man's zone area, this is it's a typical behavior of the price pattern. Like as I told you, when it moves to a no man's zone area, the price moves. The swings can be like a seesaw, like a few minutes it's up, then few minutes it's down. But until it breaks out of this two barriers, then we know. If the low is registered within this area, the price goes higher, then I can go for a long. But if the price is, the highs is within this area and breaks this zone area, then I can go for a short. So that would be my game plan, and that's how I take my trading decisions for this particular instrument. Okay, the trade which I suggested, yeah, you said it's not a good trade, risking 35 to 40 pips. Yeah, like that's what as I told you early on, right? Sometimes the market doesn't give you a good signal. So if you are a very conservative trader, then probably you can stay away from that particular trading decisions, because that's how you can plan your trade, whether you want to become a quality trader or quantity trader. So if you feel that your risk versus reward doesn't justify, then you can stay away from that trade and you wait for better trading signals or a better trading opportunity, right? So that's how you make yourself a better and quality trader. But there are some guys, you must understand or accept the fact that there are some guys who are looking at 20-30 pips risk reward, and sometimes they do not even have a risk versus reward strategy, meaning as long as they make 20 pips, 30 pips, they still take the trade. So this is mainly for all those guys who feel that if you want to still insist, you want to take a trade, you can go ahead. Otherwise, you can stay away from the market and wait for better signals. Okay, what is the link to the last side with the Euro USD input? Okay, I think you want to see the last side that, okay, let me show you, get back to that slide. Okay, this is, basically, this is what is happening. See, in fact, the market is trying to, break that 135.25. So let me, show you that screen, right? So, maybe, this, like, as I said, now it is testing that level, 135 25. If it breaks, then you can take the trade, right? So and of course you have to put your stop loss. You must understand that trading is a game played with probability. This is we are looking to trade on probability. So as a result, you have to have a specific game plan before you take your trade. The Aussie, I think the Aussie has started to break. Okay, I do not know what is the announcement it came. Let me show you the chart again. The price just breached that level, and right now, if you see on a 1 minute chart, okay, the swings are quite wild, meaning in the sense, because the market has got a shock. So we have to wait, and if the price moves lower than this, then I presume the price is expected to come down or go down, right? So, and I think our euro order is triggered, right? So this euro order is triggered. So I think the first order we have to let go that trade. Or let me go and show you that screen back. Okay, this order is triggered. That means we have short now at 135.25, which is triggered. And this order, maybe we have to cancel this order, because chances are, since it started to break lower, it break, it main order done. So just give me a minute. Order we are let. So as this doesn't trigger, but the second order I think is triggered. So we have to wait for the market to give us the answer, right? So basically, this is how you do, and this is how you take your trades. Because I think you should have a game plan before you take your trade. As this is what I'm going to do before the market comes in, or when the market trades. Try to refrain from putting trades on market orders unless the price is trading at that specific levels. Otherwise, most of the time, if you have a game plan, you should be working, and the emotions would be more or less is under control, right? Any other questions? If you all want to discuss on any specific instrument, feel free to ask, and please specify the time frame which you are interested in, because so as a result, we can use that specific time frame and discuss, right? Anyone wants to have any questions? Please try to make this session as interactive as possible, because I think the more we ask questions, I think the more we learn as a group, right? The question is, how do we get the trade track list? You see, our website is precisetrader.com. Maybe I can give you this website. Okay, this is a website. If you want anything, please you can write to us. We will be very glad to answer your queries, right? Can we see the pound USD, please? Okay, this pound USD, please try to specify the time frame which you want to discuss, because see, when we discuss, you see, most traders they go in the wrong directions, because they are discussing on a different time frame. That means they do the analysis on a different time frame, and they take their trading decisions on a different time frame. So as a result, they may be right, but sometimes, because of that not enough of holding power, or the stop loss they put, they may go in the wrong directions. Maybe they're immediately wrong. Later on, in the wrong run, they will be right. So please try to be more specific on the time. So this pound USD wise, we see a long candle which was a huge sell off yesterday, right? So right now the market is still being within this range. So what we feel on this particular market is, in fact, our price target is quite far. We are looking at almost like about 146 level, for this specific instrument. So here, as a result, if you notice, the market is still in a consolidation mode. So what you should be doing for today is, in fact, this week you can expect the pound to close near the lows, right? So as a result, when you want to try to long this, be extra careful. So the levels for this particular instrument is, we have 15025 is where our resistance zone 1, right? And our support zone 1 is 14955. Okay, and what has happened is, the price has fallen before the support zone 1. Now the support zone 1 became a resistance. So now the price is falling. So it should test the prior swing low, right? Which is 147.85. So what happens before that is, I see a minor support level at 148.70 and another level at 148.40, right? So these are the immediate barriers for the price to reach this level. So what I look forward to is, that means the price is expected, as a result, you see it's coming off, so expected to come down, right? So please pay attention to 148.70 and 148.40 if you are looking to buy for a quick profit. That is when you trade against the trend. Otherwise, you have to wait for the price to see. And overall, we still feel, it is going to come down, right? Okay. So what technically, the next question is, what technically tanked the pound USD from Sunday? Technically, when you look at let's say we look at on the daily chart. Overall is, you should understand the fact that this market has been down for quite some time. It's in a very strong downtrend, right? So it's just that the trend has not ended. So as a result, you see a lot of stops triggering, right? So as a result, you see a lot of stops triggered. So you are expecting. So like as I told you, this might be somewhere the levels whereby we can expect the price to bottom, about 145, 146 level. That is based on the yesterday's move. So overall is, this week, you can expect pound to be pretty weak. So try to try to sell on rallies, meaning in the sense, when it moves higher, then if you sell, then that would be a more viable trade than, rather than buy on dips. But when you buy on dips, you have to be very fast, meaning about 35 to 40, 50 pips. You just book your profit, then you wait for the market to move, right? Okay. So any other questions before we end the session? Okay. If you have no questions, thank you very much. Okay, and I would also like to take this opportunity to thank FX Street for organizing this event. And please also look, if you feel that if you want to ask on any specific, you can also write to us. We have a webinar with FX Street on every Tuesday and every Friday, right? Tuesday is around 3 GMT and Friday is 12 GMT. I think this week we do not have because of this non-farm payroll event. So we will be having it next week. So feel free to come and for this session to ask more questions on pertaining to the market. And we also have an in-house webinar which is every Wednesday, which is 12 GMT. If you want to come during that session, also you would be we will be very glad to be of assist to you. Okay, the last question is euro pound. Okay, euro pound. Let me look at this euro pound before we end the session. Okay, this euro pound wise, if you notice, let me clear this line so that. Okay, what has happened is, okay, it has risen. Okay, just give me a minute. Okay. What has happened is on the hourly, right? It has risen quite high, right? So this move is happening as a result of the pound weakness, right? So you should understand the fact that this has already risen. So and also your RSI all are extremely like overbought, right? So what I feel is it's still it has got more upside momentum, right? That of course it has to clear this barrier which is 9150, right? So once it clears that barrier, then it can go higher, but the upside may be limited because it has risen so high. So chances are the price would give me a minute, I'll show you how. Okay. So the high, yeah, about 9230 level, right? So 9230 level, you can find a major barrier for this market, right? So what I would tell you is to try to have that figure in mind. Then you can take your trading decisions accordingly, meaning in the sense I know that my upside is going to be limited, but that is provided it breaks that 9150. If it doesn't break, then if the market turns down, then chances are that the high may have seen, then you see the price coming off. So that is the thing you have to expect on this particular instrument, right? Okay. Okay, I think I've answered your question. You've been expecting it to move down, but it's not happening, right? So, like as I told you, since because this move is happening because of the pound weakness, okay, and that's the thing that is dragging this euro pound. So, get yourself prepared. But overall, is this market has made more or less a major turn, meaning on the daily. So, if you have caught, what I would suggest is try to exit because this if you see on the daily trend is also it is making higher highs. So as a result you can expect more upside bias happening. Okay. Okay. With that, I think I would like to conclude the session. Okay, once again I would like to thank you for coming, and I also like to thank for FX Street for organizing this event, and looking forward to see you again. Right, till then, goodbye.